Hi everyone. It's a pleasure to share the stage with Scott today, the founding partner of 1982 Ventures. So I would like to use this opportunity to benefit all the founders here to invite Scott to share about his insights on Southeast Asia's landscape, VC landscape in Southeast Asia, especially for early stage AI fintech startups. So Scott, I believe there are many people here in the audience like to know more about 1982. So can you share a bit about your background and what led you to start 1982 and your investment thesis?
Sure, thanks everyone. 1982 Ventures is a VC fund that we invest in seed stage startups across Southeast Asia. We have sort of two theses. One is heavy fintech, and the other is enterprise technology. And investing across Southeast Asia, that again falls into kind of two buckets. It's startups that are solving problems in market, so in Indonesia, in Vietnam, for those markets, and then usually more Singapore-focused startups that are solving problems for the world. And those are B2B startups, and we say the sort of core infrastructure layer, but the thesis is really about tacking on to the growth of this region, and also our belief that you can really build world-class technology in Singapore. And Singapore continues to be a hub for entrepreneurs from around the world to come and start companies.
So what excites you most about investing in early-stage AI fintech startup in this part of the world?
Well, you're an early-stage founder, so I guess you know the life of that. But I think all early-stage founders have to really like working with companies, working with founders, kind of sharing that passion every day. As a fund manager that also owns the fund with my partner, we're also sort of entrepreneurs ourselves. So we like being a part of that journey. We like working closely with founders, sharing those wins, going through the struggles, seeing a company take shape, and sharing in that journey. I think that's what really drives every early stage investor.
What traits or behaviors in founders do you find most challenging or difficult to deal with?
Ooh. I think founders are always quirky. Everyone knows that. If you're a founder, you probably feel you're a little different than the person next to you. So I guess I wouldn't really focus on what's different. I think it's always interesting what drives founders. We like working with founders as partners. So founders that treat us like a partner, that share information, that ask for help, that are open, and we do the same with founders. We're always asking for help with them or from them. So I guess when you talk to your investors, what are the positive traits of investors that you like to work with?
Well, it's a question to me. I think it really depends on the engagement with the investor, because usually it will take about at least a few meetings, a few conversations to get to the term sheet and talk and close around. So from that few conversations, you sort of can tell whether the VC or the investor has a particular knowledge about the industry, and whether you are the one that has to educate or you are the one who need to leverage their help, and whether or not they understand the struggles that founders face, because in the early stage, it's really a lot of challenges that we face. Not that we need to sugarcoat it, but for the investor to understand the struggles, and for us also to pick up very fast and to learn it. I think that mutual respect and mutual understanding is key. And usually from a few conversations, you can kind of tell. Yeah.
Yeah, I think that's what we're trying to find out as well. When we're talking with founders, a lot of times we like to work with founders over time before we actually invest. And a lot of times we're just trying to understand, is this founder going to go to the mat? Are they serious? Are they really sincere about solving the problem that they're trying to solve? Are they close to customers? You can't really solve problems for your clients if you're sort of in an ivory tower. So are you close to your customers? Are you close to your partners? That's what really makes a good founder. And that's what we're always trying to eventually scratch at. Can you hire the right talent? I think we were talking earlier, especially in AI. AI is very, as you know, it's sort of the more leading edge of things, and in Southeast Asia, we've had trouble. There's always been this sort of talent shortage. So can a founder demonstrate that he can build a team, that he can inspire folks to join them when there's a lot of other very large companies, that are also poaching those folks, and a lot of times you're pulling talent from them, trying to convince them to join something.
Now, early stage investment is usually about founders, but if you have seen like very great founders with business model that you think it might not work, what will be your usually approach on that?
Well, I guess how would I approach a founder that I think the business model is not going to work?
Yeah.
I think from our perspective, we want to be open about that. And I think at the early stage, you can kind of be open about that. And we do our best, and we try to separate people from their startup or their startup idea. And for us also, we want to stay close to those founders, because the worst thing we can do is sort of say, no, this investment's not a fit for us. And then 2-3 months later, the founder sort of pivots, but doesn't really talk to us about it, because that might be something that we are really interested in. So for us, our job is to sort of continue that dialogue, to stay close, and then also be clear and say, look, we've been investing in this space for this amount of time. We don't know everything. We only want to back founders who we feel know a lot more than us anyway about any particular topic. Mm-hmm. But we can share some of that history. I mean, 1982, my partner and I have been investing nearly 10 years in this region, in this space. So we've seen a lot of the kind of ups and downs. We have to be careful about our own biases, because maybe just because something didn't work 3 years ago doesn't mean now is not the right time. But that's something that we're very open to share, to say, here's what we've seen in the market, here's what we've seen sort of doesn't work, if that's a blind spot for the founder or not. But we also don't want to dampen any, I guess, ambitions of a founder either. So.
But how do you then balance the risks and the opportunities for such early stage investment?
I don't know. We do our best. I don't think there's any silver bullet. If somebody tells you there is, they're I don't know. It's not in a spreadsheet. At early stage, it's all about people. It's about building relationships. Mm-hmm. The same way that founders are building relationships with their clients, your client has to take a bit of a flyer on you to work with you. The same for us. We're sort of taking a flyer with every adventure to start with. And like any relationship, they develop over time. Sometimes they just become really strong. I mean, there's founders that we have deep friendships with that some of those startups went exceptionally well, and some of those startups have not gone exceptionally well, but there's still a relationship there. And I think that's what that's really what it is. So from a founder's perspective, it's always important to kind of remind yourself of that with your clients and with VCs, who you should think of as partners, because early stage, everything is chop. There's a tendency to get a bit transactional with things, and founders have to be ruthless in the way they prioritize all of their time, but there is a balance there, and to come into a relationship genuinely, and also weighing opportunities as well with investors, because if you do take investment, you're on that ride with that investor for a long time too, and I think every founder has one or two horror stories.
That's very insightful. So you invested in CryptoLock, Untukmu AI, and Paid. What are the specific signs indicated that it was a green light for the investment?
I think it's a little different from every investment, and we've been doing a lot of AI, of things that maybe don't say AI on the tin, because there's been, at least since I've been investing in Southeast Asia, there's been about 3 cycles of AI, at least, where, for 6 months, every startup just puts AI on the front of their deck. And a lot of those startups, and fortunately I don't have the database going all the way back, but I would be interested to look back and see, did these startups actually develop anything that we would consider AI today? Some of those startups have good businesses, and there's no AI. That's fine. But I think in this region especially, a lot of investors are probably a bit more skeptical of AI. And now that we're probably about 18 months past the sort of the GPT unlock or whatever it is, even in the US, which is always 6 months ahead of us, we're seeing very big companies collapse because they haven't raised funds. So there is, I think there's always this overlay of hype cycle, but then we know now that it's actually easier to sell enterprise technology with AI. So it's not just the buzz from investors. Actually, there's some buzz from customers because customers are trying to tick the AI box too. So if you're buying an enterprise software solution, if it doesn't say AI on it, then whoever's purchasing, making that decision, somebody's not going to like it. Somebody's going to say, yeah, but we need an AI tool for this. So there's a bit of balancing on both sides. But the best companies that we've invested that are building AI, and maybe this is because those investments were kind of leading into a hype cycle, we didn't ask them to build AI. There was no mandate to say, look, you have to build this, but do it with AI. They're companies that found a very natural use for it and built teams that were able to actually execute it themselves. And maybe there's some hindsight bias in that, but it's really, for us, it's always got to be kind of first principles of, is there a business that you're building here? Are you using the right technology to do it? And do you have the team to actually execute that? That's, and the last one is hard.
So you mentioned just now like a few examples in the US whereby they did not manage to raise the next round and hence they failed. So I assume that because to build an AI, to build yourself, it requires a lot of investment. So have you seen any case in Southeast Asia whereby the first check itself is pretty big and a lot of investment required to build that AI for the business before it can actually generate revenue? What is your thought on this?
Yeah, I think Southeast Asia is a tricky place in there. If you look at who's investing in AI, if you look at sort of the league tables and that, there's a lot of investment by incubators and I guess those earliest stage. And I think that also speaks a little bit to where we are in the journey. And it feels like we've been doing this AI thing now, again, for like 18 months, and there's already some blood in the water, but I think we're very early in the whole cycle of things. And any business that you're building, you need to be thinking 10, 15 years if you're building a startup. So there is, I think fundraising is slow right now, post-Series A anyway. If you look at the funding that's been going on, the successful fundraising, a lot of times there's a lot of support from existing investors into those rounds. So it's just a little bit of, I think, you have this kind of hot segment of AI, but then you have this other overlay of where the market is still. And markets have only kind of recovered a bit in the US, and it's still very patchy. We're a little bit behind here in Southeast Asia, but I'm very optimistic about that. I think there are more, when I speak with my other, my friends in the VC community, there's a lot more interest, sincere interest in closing transactions, and I can tell you there wasn't 9 months ago. There's the reality of it.
So for a startup like from pre-seed stage to get to the seed or pre-series A stage, what are the must-have for the startup to attend the new rounds?
It still varies, right? And I think the way we invest, and we have this kind of in-market, for-market, and then this sort of Singapore for the world, I think the milestones are very different. A lot of startups in enterprise tech are still, once you get Series A, unfortunately, the metrics are pretty hard, and a lot of them are attached to revenue and these kind of targets. For things that are more pure tech and global, there's a bit more leeway, but there still has to be some, I think, some hard numbers there. So if you're building really a application that's not sort of like more pure tech, something in cybersecurity or things like that. But if you're building a pure enterprise solution, then by the time you get past Series A today, people want to see revenue, and people will start pricing. Most investors will start pricing towards that. So it's still not an easy market. It's a very difficult market. At the seed stage and really early stage, most investors like us have a bit more of a long-term view, I would say, and are more comfortable funding things that are not going to be, directly to say, okay, we're only wait until you've got X amount of revenue today. I think is a bit more. We're looking for different signs of life, but investors are still cognizant that those next investors will be, and that question is being asked much sooner today than it was 2 years ago. So there's still a bit of that looming, AI or no AI.
So can I summarize it as first check about the people, the founder, but immediately a second check is all revenue driven?
Yeah. The goalposts are always changing, and I think that's one of the things that if you're an early stage founder, you want to. This is something you can work with your investors on, because like everything in life, what got you here doesn't get you there, and so the same way your team has to keep growing. Also, you have to show that growth in the organization, and the bar keeps getting higher and higher. So that's just nature, I guess.
And how do you anticipate the role of AI evolving in key industries like finance, enterprise SaaS in Southeast Asia? What is the timeline for it to pick up?
I think AI in finance is still a tricky one. Right now, I think there's a lot of tick-the-box initiatives. A lot of, and I would, I guess, I would love to hear other folks. We can talk afterwards, but I find that a lot of the AI use, even amongst large corporates who are working with Microsoft to launch GPT within their organization, a lot of that is still very personal use. So it's, hey, how do I write this for me, summarize that for me? There's not yet, even amongst large corporates who have spent a lot of money to take all of their information and put that into models, there's still not yet a lot of the things that we would think are there yet. And Southeast Asia, most of Asia, I think we're still quite behind. But there's a lot of kind of fluff above there, but that's also sort of opportunity. Where it is more successful is, I think that the AI that we've been sort of more, like machine learning, these kind of things that have been maybe get less attention just now, but have been a focus for a lot of folks. Those things are becoming more and more table stakes within products, and we're seeing a big divide now of products that sort of have that built in, and things that are just sort of a SQL with a front end. I think that level of technology is kind of getting phased out. People want a bit more. People want the richness, or things that can be added on later. So.
Okay, so if I summarize it correctly, it's more on building applications layer whereby it allows the AI to be on top in the future as you collect more data.
I think so. People want to see the path forward. They don't, even when we talk to corporate innovation folks as potential customers for these solutions, a lot of them aren't really sure exactly what it's going to look like. So I think there's so much white space. I think that's what's exciting for founders today.
So there's a lot of proposals that Scott can receive from the founders today on what will happen next for AI in finance in Southeast Asia. So I'm aware of the time. What is the final piece of advice you would give to the founders, the AI fintech founders here today?
I think when it comes to specifically to fundraising or even working with clients, is just stay build relationships with the partners. VCs are still very partner-driven for the most part. It is a relationship game. It's about what you're going to receive as well. So not necessarily cash, but go into it like you're getting married, I guess, would be the thing. Figure out if the person's the right partner for you. Do you like working with them? And don't second guess that. Clients the same. I think having great clients that are really bought into you and your success is what makes a successful startup.
Thanks for the sharing, Scott.
No, thank you.
I'm pretty sure it benefits our founders here today.
Thanks.